Hello, this is Maxim Cruz coming to you live from Miami. So, January 11th, 2023, I just came from the CCIM Commercial Real Estate Outlook Conference. So, every single year, if you don't know, I'm a commercial real estate broker here in Miami. I'm also an investor. And every single year, CCIM, which is the Commercial Members Institute, puts out a conference in local markets and national markets discussing about what's happening. And that's very important as a commercial practitioner, not only to be able to kind of see what's happening on a nationwide level, on what's happening with the economy as a broad scale outlook, but also what's happening kind of in the micro markets. And that's kind of what I've been saying here with my clients and people that we invest in with my business partner over the last year, where every single deal, every single transaction has to be looked at individually. Now, there's a few things that I want to share with you today that continue to come up during this conference. And I think for you as a business individual, as a real estate investor, as a person that really lives on this planet and is involved in the economic cycle, because whether you're an investor or not, you're still paying for things as a consumer. So it's important to kind of know where things are, where things are going. And I figure I share some tools or some tips that I learned from you about what different people are looking at, and hopefully you can implement that in your business. And if you have any questions and would like any more clarification or help with something, I'd be more than willing to allocate the time in order to help you with the things that you're looking for. So one of the things that, again, in January 2023, that people are coming into and looking at is fundamentals, right? So when you look at fundamentals, whether it's real estate, whether it's business, the number one thing that came up over and over again is cash flow, right? You want to be cash flow positive. So the question came in as, how do you become cash flow positive? Because again, if your business isn't making money, if your real estate assets aren't producing money, you have to look at that and you have to say and raise some flags and say, hey, what can we do? What do we need to do in order to adjust this? Because it's not sustainable, right? It might be sustainable for a short period of time because you have some reserves, you have some savings, whatever, but long term, a ship that has a whole bunch of holes and it's sinking, if you don't have to cover up those holes, the ship is going to sink, and that's it, you're out of the water, right? So the same thing happens in business. Look for the holes in your business, in your real estate. Specifically, let's get into it, debt service, right? A lot of the people either bought before the pandemic, so they had fairly low interest rates, or they locked in some great interest rates during the pandemic. The one opportunity that's going to come up here is for those people that had variable interest rates or variable things that is now increasing or fluctuating their debt service, how to restructure that and how to look at that and look at some creative ways to really, control that expense. The other thing is expensive. Here in the state of Florida, and eventually it's going to trickle down to, California, things that recently happened in New York with a whole freeze, is going to be insurance. Make sure you're shopping your insurance at least every 9 months, if not every 12 months, before you just renew that coverage over and over, because here in Florida, it's risen anywhere from 100 to 150%. Some people just don't monitor that. I know in the building that I personally live in, the insurance went up about 50%. So, we have to shop for things. Another thing that you could look at with insurance that you can apply is looking at the deductible that you have. So some people, especially homeowners, they have a really, really low deductible, but they're paying a higher premium. So if you're not, of course, you don't know when you're going to need to utilize your insurance. But again, as a multifamily investor, let's say your deductible is set to $2,500. Typically, when you have a claim, it's usually larger scale. Most multifamily investors and operators that I know are not going to go out there and make a claim on their insurance for, a $6,000 item, right? It's going to be something large. A hurricane happened, you had a flood, something like that happened, you have $30,000, $50,000, $60,000 of damages, and then you're going to the insurance in order to make these legitimate claims. And then you got to ask yourself, right? If you have a $60,000 claim and your deductible is, let's say, $2,500, but your premium is, let's say, $20,000, If you adjusted your deductible to, let's say, 5,000, could your premium now become $12,000 or $14,000, decreasing that insurance expense that you have, hence making you more cash flow positive. And of course, in the scenario where you do have an item that needs coverage, you will have to come up with that money out of pocket at that time. But again, if you're operating with reserves and have some a savings account or access to a credit line in order to fix these emergency things as they come up, that's kind of a risk that you want to weigh in. The other thing is also looking at growth. A lot of people, they got comfortable, right? And they're keeping their business growth, or they're keeping their prices the same. Same thing with rentals, they're looking at the same thing. Ask yourself, what can you do different? Have you had a really long-term tenant and maybe their rents are a little bit lower, and because they've been consistent and because you feel like you owe it to them and they've been a great tenant, right? And I'm not telling you to go out there and overcharge. Personally, what I've done in some of our investments that my wife and we have together is we're about 90% of the market value. Some investors that I work with and some partners, yes, we're more aggressive. Maybe we're 95% to 100% of market value. But personally, on my things, I would prefer those long-term tenants versus having the turnover year over year or maybe every 2 years. But again, just look at that. Make sure that you analyze where your leases are. Are they within market value? Are they 90%? Are they, 50% of market value, and how you can increase them. Same thing with growth. Also look at potentials that you might have in your properties or in your businesses. What can you do? Can you provide another service? Can you make a little gated area, make a dog park and charge pet rent or charge a pet fee? Whatever those scenarios might be that might increase that little cash flow and might grow your business over time. And with that, your marketing strategy, don't allow your building to become stagnant and allow this to get a bad rep because of a bad tenant or a bad situation that happens. And also be continuously marketing, right? I learned that one of the things is some people just invest and they're thinking, oh, well, I bought this great deal. What's your exit strategy? Have an exit strategy. Are you marketing yourself as a business correctly? Are you marketing your investment properties correctly? So make sure you're analyzing and looking at your marketing strategy and evaluating that, how you're doing. And then the last thing, and I kind of mentioned already again, is insurance. Make sure that you're on top of it, of what's going on. So the next thing that we talked about at the CCIM conference is opportunity, right? 2023 is going to present more opportunities. Like the main thing, and I don't remember where I saw this, it was recently, maybe about in the last week, I saw someone that said, hey, I'm not a money investor, I'm a people investor, right? I study demographics, I look at what's going on. Is it an aging population? Are the people that are moving into this community younger and need a different type of service? If it's an aging population, what do those aging populations have? Do they have businesses? Do they have assets that maybe they're looking to sell? Tired landlords, tired business operators that have the business that's kept them afloat for the last 80 years, 60 years, but their children don't want it. There's got to be opportunities for businesses as well as real estate assets and other assets that are going to come up. So make sure you're aware of those opportunities. And also large institutional, this is primarily going to kind of business brokers. There's going to be a lot of non-performance or non-compliant assets in the institutional space because people made investments at a 3% cap rate. They got short-term loans or short-term adjustable rate mortgages at a 3.5 or a 4%, and now all of a sudden it's 7%, and now the asset itself doesn't perform. There's got to be a lot of that. And ultimately, the last point that I want to mention is volume, right? Practice business. Practice how many calls you're making, how many conversations you're making, what assets are you looking for. Heck, practice just to practice, so when an opportunity does come up, you can be quick on your feet. You could say, hey, I know what this market is doing. If you're in a service business, I had a gentleman that came to me looking to sell his barbershop, right? Because I'm practicing business, I was not aware, but I went in and did the research. Hey, what are barbershops selling for? what is the EBITDA, right? The amount of earnings that they have, and what is the multiplier on that business. You want to practice it, practice it, practice it. And that will sharpen your skills not only in the personal investments you make, but also in the rooms you go into, just becoming a more sophisticated investor, the conversations that you have, because ultimately you're dealing with people. Some people are going to look at you and without you even opening your mouth, they're going to discount you right away, whether it's right or not, whatever you can think of, whatever you think, but people are people, right? Other people, you're going to have the opportunity to come in and have that conversation and say, hey, we can continue this conversation at another place, at another time, and we could possibly work together or refer clients to each other or do business together, right? Practice that. Practice, 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 right? And then there's going to be positions where, hey, you just show up, you know exactly what's going on, and you're able to make a decision quick, right? The speed of implementation, how quick you make those decisions is going to be based on the knowledge and the practice that you have. So those are kind of my 3 tips: fundamentals, opportunity, and volume on what's happening. If you want more information about this, let me know. Maybe I'll make a follow-up video on this, sharing some graphs or some other information of what's going on. So that's it for today. Have a wonderful day, and I'll see you on the next video.